Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I'm audible to you. Let me display the today center. Thanks for confirming it. Let me display the PowerPoint presentation. Asian session live market analysis on April 9th between 5 and 5:30 GMT. We will review the market using the live market code page. I will give the link from the Tech Street. So here you come across the codes and you can make use of it. Let me display the code page. Now here you come across the majors, and this is the code page, retail FX rates on FX Street, and in this you come across a tool. You can click the tool and select whatever the columns you require. The low, ask, percentage change we don't require, previous we don't require, then tick time, high, low, and the net change. So once you select it, whenever you refresh it, it goes off. Then you have to select again. Only then you will be able to see the required codes. And the currencies are arranged according to the alphabets rather than according to the majors and the commodity pairs and crosses. So we have to carefully watch where exactly euro is placed. So euro is currently here, trading around 1.3066, 1.3068, 1.3089 is the high, 1.3033 is the low, 18 pips negative net change is seen. Then in the case of GBP, these are all spot rates. It is currently trading around 1.5867, 1.5870, 5880 is the high, 5836 is the low, and 8 pips negative net change is seen. So when compared to euro, GBP has made lesser dip. Then USD yen is here. It's on Friday, after non-farm payroll, it made a very big drop of about 50-60 pips, and it has currently come to that level of 81.41, 81.43. 81.33 was the low on Friday, and they came down to 81.27, and later on it set the high as 81.55, and the net change shows as 13 pips positive, but actually in other platform on the code pages I find it is 22 pips negative from that of Friday close. So euro, GBP as well as USD yen, when they show negative net change, you come across euro yen is, because here yen is showing positive net change, you find that euro yen is showing positive net change and GBP yen is showing positive net change. Anyhow, nominal changes have happened during the start of the Japanese session, and because it is a Easter holiday, extended holiday on Monday, so European session will come across predominantly holiday thin volume. On Friday, you would have noticed that even though it was a holiday, during non-farm payroll release, they made a small swing, and subsequently towards year session, they gained the level to 1.31 in the case of euro. Again, they dropped it during the start of the week, and as a week beginning, false move on the downside. Then Australian dollar is showing about 41 pips negative net change. I think the net change is not taken based on the average trade at last 30 minutes on Friday. That's why it shows 49 pips negative net change. There is another quotes page which it shows only 17 pips negative net change. We come across variations here. Then similarly with regard to the high and the low, the high in the case of Australian dollar is 1.0303, whereas here it shows 1.0294. and 1.0257 is the low. So slight variations are there. Probably we have to check from that of the other codes whether Saxo Bank is giving better high and low we have to see. There are other providers also. You can just go to various providers and search for the codes. So again, we have to set what are the columns we require. Okay. Yeah, Saxo code page shows the 3 pips negative net change. So you find that different banks, when they offer, they don't exactly take the closing price. Probably they just taken the closing price of their platforms, and from there they are calculating the change. Then you find a lot of variations. So any good provider who is really giving the market quote is very important for us. So then in the case of Euro in Saxo Bank, what is it? Yeah. 1.306568 at the current level, 19 pips negative net change is seen, whereas in other quote pages is 30 pips negative net change, and GBP again 9 pips negative net change, other quote pages 3 pips negative net change. So we have to look for who is a reliable provider of all the list we have shown here and try to choose the right type of quote page for our trading decisions. Let me just explain that in the case of Euro, USD and GBP, they are showing negative net change at the moment, and we know that these are all contrarian moves. Euro and GBP are showing the USD gaining move, and the USD is showing the USD weakening move. USD weakening move. So that is a contrarian move. And also we come across in the case of USD. 1 minute. So USD CAD and US Australian dollar are showing negative net change, but here is showing positive net change. Negative here, and USD CAD is showing negative net change. So that shows that they are making contrarian move. Australian dollar is showing USD gaining move, and Canadian dollar is showing USD CAD is showing the USD weakening move. It is a contrarian move. Whenever there is a contrarian move, you know that they are handling the crosses. And just because it is a holiday in Europe, most of the places in Europe, so you come across thin volume market swings are happening at the moment, and they are just keeping Euro and GBP in a range bound from that of Friday, excepting USD Yen. USD Yen from that of 82 area, they had dropped about 40 to 50 pips and come down to 81.45. And after the week beginning downward contrarian move, in the case of Euro, USD Yen and USD GBP, they are expected to make an upward contrarian move. On Friday, they made nominally before that of the non-farm payroll, and then subsequently made the drop. So they are handling the yen crosses primarily, and also the crosses of the commodity pairs. That is why you come across in the case of commodity pairs like USD CAD and Australian dollar, the negative net change. So you can identify how exactly they are just handling the respective pairs. Then subsequently, we can take trading decisions depending upon the pair in which you are interested, and we know that they are handling that particular pair in a given time. That is very crucial for us. So let me go back to that of the PowerPoint presentation. So we make a note of the initial lows and the highs in 4 majors and 2 commodity pairs. So you can note down by selecting a reliable source where exactly you come across the initial lows and the highs, and then start using it as a reference level to identify the type of and the sequence of move they could do it. So above that of the high, if they make an upward move and come down below that of the initial high, then we know it is a stop point. So for that, the reliable high and the lows are very, very important. And if it is taken randomly, then we may not be able to identify the type of moves at all. So then also with regard to the sequence of moves, this is very, very important to identify whether they are done a stop point or an false move or an extended move to understand what is going to be the next move. So always they repeat or alternate the extended move with that of the intentional move. Extended move is for 2 hours and intentional move is for 2 sessions and the start of the third session. So in between you come across the upward stop trend or a downward stop trend and a false move up to that of the high or false move up to that of the low. And also swings between the low and the high in case if the volume is less, and during that of the mid session they don't normally breach the high or the low and they try to handle the crosses. So during handling crosses, they don't bring in much of an activity in the case of the majors. So what they do is they only make a swing between the low and the high. Say in the case of Euro, they just make a rise up to that of the high. In the case of GBP, they make a drop up to that of the low. Thereby, Euro GBP, they are able to rise. That sort of moves, they try to do it during the mid sessions. Then the late sessions start, they do the stop runs or the false moves. So always during that of the early and the late sessions, they handle the majors, and during mid sessions, they handle the cross. That you have to keep it in mind. Then once we find the spread between the high and the low is more than 40-45 pips, then we try to take a trading decision, try to buy near that of the low when the market is closer to low and not breach the low in 30 minutes of our observation, and then try to keep hedging order of 30 pips or a stop in case if the hedging facility is not available. Then once a position makes profit, keep stop at entry. This is the basic trading strategy. We try to do it so that we are able to conserve our usable margin. And then once the position start making profit, we trail the stop in a profit making position and we trail the hedging order in a loss making position, and try to keep a limit opposite to that of the position where you are entered. If we are taking a buy near the low, then near the high we try to exit. If we are taking a sell near that of the high, we try to exit near that of the low. That is how we fix the limit. When the going is good, we can move the limit away from the other market as long as the trailing stop is not hit. The trailing stop distance can be about 15 pips if the market is making very slow swing. If it is making very good move, then we can keep about 30 pips trailing stop. That way, we will be able to protect or get the maximum profit out of that. So only when there is a quick move in the market, now you find subdued moves, the market is in the middle level, there's no point in taking a position. And if we take a position in majors, I'm talking about the majors, you can take positions in crosses during mid-session. So when you try to take it, then our waiting period will be long. We have to hold the position for a prolonged period to see profit. In the process, we may lose our patience and do distress trades. To avoid that, always try to enter into the market whenever they make a very quick drop and see that they stop cutting the low for 30 minutes of our observation. Or if it is an extended move, you are able to identify, then try to wait for 2 hours and then try to take the buy position. If you identify it as an intentional move, wait for the 2 sessions and the drop during that of the third session, then you try to take a buy position. They are expected to bounce back. At that time, you can book profit. This way, your entry can be fine-tuned by identifying the type of moves they make it in the market. Now, with regard to the initial lows and the highs, Euro formed the low 1.3034 and the high was 1.3104, and you find more than 40 pips spread between the low and the high, but currently staying in 1.3066, the middle level. Then GBP 1.5836 was the low, they are not breached it, and 1.5894 is the high, and that is also not being breached. But Euro GBP and the USD yen are still in negative net change, excepting USD CHF. All other currencies are in negative net change. They are just pushing it down as a weak beginning false move. And USD yen formed the low 81.20 and 81.58 is the high. 81.43 is the current level of trading. Then USD CHF 91.66 is the low and 92.18 is the high. They are not breached the low or the high. You can see that CHF gradually gaining the levels. And during the gains in the case of Euro and GBP, you might be able to see that CHF is not retracing again and hold it and make sideways move and then continue to gain the levels. USD CAD 99.45 is the low and 99.84 is the high. They're just holding it in this particular range 19 area for a prolonged period in order to make a very big upward move. And also in order to handle CHF CAD cross, they are trying to do this. And Australian dollar 1.0258 is the lower. They are not breached it. 1.0303 is the high. And currently trading in the middle level 1.0285. So all these currencies are trading in the middle level as we envisage. It is a holiday thin market, and so the market looks for some trigger to make the moves. On Friday for a non-farm payroll, they are normally expected to make a very good move, but they made a nominal swing and gained the levels in the case of euro for a weekend, and again dropped it and come back to the same area in all the currencies, excepting USD yen, which has made that drop. And this is mainly to make an extended downward drop in the case of USD yen in order to make further rise. So they gained the levels in the case of euro yen last time to the 110 area, and they have come down to 106. Similarly, in the case of euro GBP yen, they have come to that level of from that of 132, 133 to 129. So these are all the extended drops. They have done it in order to accumulate more position to gain further in the market. We'll be able to come across how exactly they are accumulating the positions and gaining the levels in coming days. Then later on, we'll be able to understand that they drop to buy and gain to book profit. And this we may not be able to understand. We may say that the economic conditions are important for that. But in the course of time, when you try to follow that and trade and lose money, we'll come to the conclusion that market is being manipulated. Then the expected market moves derived from that of the algorithm, a small dip during the start of the Japanese session and then firm up. The expected move, they have done the dip as a drop in the case of euro from that of 1.31 area to 1.3034, and then they just gained. But GBP they made a nominal dip, and yen also they made only about 20 pips dip, and they started gaining. Swing and firm up moves are expected during that of the European session, even though it is predominantly holiday in Europe. They made very big moves even on holidays, but now because of the volume constraint, they are not making very big moves. Even on a normal working day, and hardly I come across spikes in the market. And we have seen spikes for 100, 150 pips in just one go, and those things have become history now. Then Irish. They expect euro and GBP to make sideways move this week. They are expected to make sideways move, today being a holiday, and tomorrow we have to see whether they are trying to do the week beginning false move tomorrow or just limit it today, because it all depends upon the traders taking positions. If the traders freely take sell and buy trade, then it is easy for them to buy all those sells and just gain the levels. In case the traders also try to do buy and sell trade along with them, and predominant of the traders, I mean. So when the predominant of the traders also do buy and sell trade, then invariably the players try to hit their stops before making further rise. This is the game. So who is going to win? Ultimately, they are giants. They have got the capabilities of winning in the race, and they have got a lot of information by which they can make decisive moves in the market. Whereas we have to either speculate or use various other indirect methods to identify whether they are going to rise the market or drop the market. So we have our limitations. So to overcome such limitation is take very less positions so that our usable margin will be able to protect us, and always try to see that when the profit is seen, immediately keep stop at entry and use the hedging to limit the risk. Because if we try to take an open position without a hedging or a stop, then in case if they drop or rise drastically against us, then we may become demoralized. However mentally strong you might be, when the usable margin erodes, then you find that it is really shaking the people. And that is the main reason that many of the traders do distress trades, even though they know very well that they are cutting their position at the lowest level out of fear. They find in the event if the market drops another 20 pips, there will be margin call. So they have to forcibly cut the position. After cutting the position, the same quantum of position will not be able to take because the usable margin is reduced. So you might be permitted to take only one position instead of 5 positions what you have closed. So these constraints come because of over trading. So my humble request to that of the traders, if you want to really earn from that of the market and also try to avoid the brokers trying to play a trick with you, is take only one position at a given time and take an exposure for 1%. And you may earn $50 or $100 by taking a mini lot, doesn't matter. But when you do several such trades, you'll be able to see the equity is building up. Out of, the hurry and the impulsiveness, we wanted to become a rich person or just somehow we wanted to earn back the lost money. Many of the traders come to that of the market with the intention of making quick money. I don't think that anybody comes here to become a billionaire straight away. They wanted to make some money to add extra cushion to their life comforts. But in the process, they lose the money. Then their next objective is somehow that lost money has to be earned. So for that, they just use their savings and things like that and see that they are able to earn. And in that process, some become addicted to trading without understanding that they are just getting reduced with their lifestyle and they are not able to meet other expenses and things like that and get angry with their family and make their life miserable just because of the market. And in an irrelevant way, they might be talking to the wife and also the children about the market and they may not be aware of it. And that sort of eccentric conditions could be the status in case if the traders become addicted to trading. To avoid all those things, the only thing is try to take only one position and see that you are able to book profit. Patiently wait and book profit. Market rewards patience. And then subsequently look for another trade. Irrespective of the market move, you will see continuously you are making money from the other market. And I have been preaching this for several traders and they are all thankful to me. And those who have been strictly following it, they take only very less position and try to see that the profit is booked and also use the hedging order to limit the risk and things like that. They say that no forecast is required if I use the trading strategy effectively. That's what they say. I want you people also to say that. Then Rome. Do you see a big jump in euro as it is a holiday in Europe? And I'm not envisaging a big jump straight away today. Probably tomorrow they could do it once the traders freely short euro and GBP using some rumor or news. Okay, Robert. Why is there trending move in the market? Can be determined indirectly when it is possible for the position trade. See, I have been explaining, Robert, that first in the last week of the month, they are expected to make the volatile moves, the confusing moves, or the trend reversal moves. So it will appear as if a trend reversal, and they may continue the trend, or it might be a genuine trend reversal, or a simple volatile moves in a range. So during the first week and the last week of the month, they are bound to do that so that they are able to handle the derivative market, options and futures, so that induce the traders to take wrong positions, etc. Or if the traders, when the market is at the lower level, like USD yen around 82, after showing 84, so a lot of traders would have taken the options around 84, thinking that it will reach 84 soon. But the next month they show 81 and make your option expire or lose the money. Then later on they go to 85. So this sort of moves, they can do it only during that of the month end and the new month beginning time. Is scalping trading strategy more safe? Scalping makes you impulsive. So you become impulsive trader. Once you become impulsive, then invariably you find that eh, your common sense fail to work at times. So immediately as you are doing the scalping, you become frightful as well. So that you need to take care. But I don't recommend scalping for small traders because invariably they lose more money whenever the market creates the surprise because they tend to trade without a stops, etc. And they don't try to trade when the market is making very big volatile moves. They try to do the swing trade when the market is very calm. Suddenly when they make quick upward or a downward move, they just close the position with a bigger loss. About 3-4 trades with 10-15 pips profit and one big trade losing about 100 pips. That's what happens most of the time. So let me go back to that of the PowerPoint presentation. So initial low and the high, they are not breached in any of the currencies as we observe. So they are just holding it as a thin holiday prone market. And now the expected market moves, the dip and firm up moves are expected during Japanese session, swing and firm up during European session. And the US session is expected to show swing and rise move. So I'll come back tomorrow and review the market. And meanwhile, if you want to give any suggestions to FX Trade with regard to the live market code page, then you can contact Maud at fxtrade.com. So she'll be able to take the requirement of the visitors and accordingly they will develop the live market code page to our requirement.